Good morning. This obviously is 101.5 FM if you just tuned in. This is the Real Estate Show. We've got Joe in this morning. Good morning, Joe.
Good morning, Lucy.
How are you this morning?
I'm fine, thank you, and ready to go.
So what have you got on for us this morning?
Okay, well, good morning, listeners. My name is Joe Maver, and I'm proud to welcome you to the Real Estate Show on 101.5. We've got a couple of interviews this morning, one with David Dioth, who's the CEO of MortgageWise Mortgages, and with him I'd like to discuss how to set yourself up to purchase a home or your first home. And then later in the program we'll have Brant King from Quinn and Scatini, and he'll be talking about issues arising from early possession on contracts. I'll also throw in a thought for the week, so I hope that'll be entertaining for everyone. Welcome back, listeners. Well, this morning in the interview, as we all know, you can't get money for nothing, but I've got someone here that can help us maybe achieve a little bit of a loan to get a home or their first home, or just purchase another property, investment, or move on to a bigger and better home. So with me in the studio, I've got David Dioth, who's the CEO of MoneyWise Mortgages. And so welcome, David.
Thanks, Joe.
Now, David, tell us a little bit about yourself and your history.
Yes, Joe. I started in a major bank in Kilcoy in 1970. I now have over 40 years of banking and finance experience. 14 years of those were in a major bank treasury money market dealing area, where I was involved heavily in the interest rate risk management section. I've had my own broking business since 1998. I'm a fellow of the Institute of Public Accountants, a member of the Credit Ombudsman Services, Diploma of Financial Services, and an accredited mortgage and consultant with the Mortgage and Financial Association of Australia.
Okay, that's quite an intro, David. I think probably the first question that I'd like to ask is, it's something that's toying at the back of my mind. Is home ownership still a priority in Australia, or are people looking at renting?
Thanks, Joe. Just before I answer that question, I should put in a disclaimer in here.
Sure.
The information discussed here today is of a general nature and not designed as financial advice. Any person or persons seeking to borrow should obtain advice based on their particular circumstances.
Great. Thanks, David.
Right, home ownership is still a priority in Australia, and more so for the baby boomers who are getting close to that retirement age. As you are aware, when you're in retirement and you're living off a set income, it's always hard to find the money for rent. And even though you do get some government assistance if you're on a pension, it's always not enough to cover, the leftovers, not enough to cover the living expenses when you sit down and calculate the figures. Also, rental properties can be sold, so that's an upheaval to an older person, and also you have the costs of removal and resettlement.
Yeah, so a couple of good reasons to have a home ownership.
That's right, Joe. And the younger you go into purchasing a home is better, so that you can have it paid off before retirement, and also put money aside for in retirement into superannuation, etc.
Thank you for that. Now, David, what age groups are first homeowners now in? Are they still the younger majority, or is it getting into the older age groups? How is that panning out these days? Because first home ownership, you would assume, is just for the young ones, but some people have rented for the majority of their lives. Is that now the case, that they're now going to home ownership because of affordability?
Yes, Joe. The range for first home buyers is from the early 20s to the late 50s. And people say, why the late 50s? Well, a lot of people have put off buying the home because they've had all the expense in bringing up their children. And as they get towards the late 40s, the children have all left home, so they do have money then to put into paying off a home. It makes it difficult at that age to pay off a debt by the time you retire. Many more young people these days also want to travel and socialise than other previous generations, so they've put off the buying of a home until later on. As I said, younger people are staying at home longer, live off their parents, and that reduces the amount of money that parents have to put into purchasing a home if they're renting, and also into retirement funds.
No, that's a fair comment. And that's right. I think the tourist industry is suffering a little bit, so let's get out there and have a look at Australia as well as the rest of the world.
That's right.
Now, what kind of savings history do first homeowners have these days? Is there any stats that say that the average 20-year-old is saving a certain amount, or do they need to save a lot more to help get their first home?
Thanks, Joe. Financial institutions usually require 5% genuine savings over a 3 to 6 month period before they'll look at lending money. However, to obtain that 5% and roughly $15,000 for a $300,000 home purchase, it's taking between 2 years to 5 years to save that 5%. But it's not just the 5% you need to save, it's the additional money, because some banks are only lending 90% of the value of the house, while some are still lending up to 95%. The 100% loan days have long since gone, and I doubt if they'll return. Whilst some banks look at the 5% genuine saving as money in the bank, others will look at using the rental payments over a 12-month period to top up that 5%.
That's great.
Also, people can get around it by young people if they've got family who are prepared to give family guarantees and the security of the family home to assist with them in the purchase. It's, as I said, the 5% genuine savings is a bare minimum. You need money to cover, additional money to cover solicitors, government duty, pest and building inspections, furniture removal costs. So it's very important that budgeting for this is very important.
So obviously the younger they start, the better off they are.
That's right.
How about loyalty from the bank? I mean, I remember back to my school days, we used to put 5 or 10 cents a week in, and the bank used to be loyal and help us find a loan. These days, is that loyalty still there from the banks and the savings?
Well, not really. The banks insist on this 5% genuine savings. But these days it's worthwhile shopping around all the financial institutions at the time you look to want to borrow, because all banks have different sorts of deals, and
Sure.
It's a personal choice of what deal suits you.
And you mentioned before that parents can also give guarantees. Now, we've known about that, but it's something that hasn't been utilised, or I haven't seen it through my real estate career very often. Is that on the rise now with the way that the economy is?
Not really. I haven't seen an increase. I'm cautious about using it because it affects the parents' or grandparents' capacity in retirement, and also it reduces what they can do with that house if there's a guarantee over it, whether they can sell it and move or whatever. It has a bearing on what their lifestyle is.
Right. Okay. Now, David, how can people plan to buy their first home? I mean, what are the basics that you would suggest through your experience is helpful?
Well, Joe, buying a home is one of the most important decisions one will make in their lifetime. They need to plan, and I can't emphasise enough the planning aspect of it. They need to consult a finance broker, financial institution or financial planner to get some advice. They need to account for future family plans, work ambitions and other lifestyle influences. They should not rely solely on the advice from family, friends and workmates. Sometimes
Right.
it's very, very dangerous.
Okay.
Financial institutions regularly change the ground rules for obtaining a loan, so that's why they need to consult regularly on what is happening. For example, I have people who come to me as they've signed a contract on a Sunday, and as they saw a house when returning from a picnic or something, and they come and see me all excited because they're going to buy their first home generally, and I have to break the news to them that they can't get a loan because they haven't got the requirements for the bank. So I do say to people, even if it's 18 months or 2 years before you think about you're in a position to buy, consult someone. Then you can put everything in the plan, budget, everything else to be in a position to buy the house and get it on the first attempt.
Well, David, that's the one thing I've liked about you, because as you know, we've had dealings over the years, is the fact that you actually do sit down with people who are intending to purchase a home in the future, and you give them some guidelines and some help. You don't just say, hey, look, are you interested in getting a loan today? I'll help you today, and if you're not, sorry, I can't help. You will actually sit with them and help them plan to achieve that deposit criteria for the lending institution so they can go ahead and purchase, and that's great, David.
Thanks, Joe.
Now, David, another one. Is It's stressful buying a home. So, from a lending viewpoint, how can a borrower minimise the stress for the buyer? I mean, or should it be just all education on the part of the buyer to minimise their own stress?
No, Joe, as I've mentioned in the previous question, it's planning and consultation and talking to the right people. Some of the things borrowers can do to prepare for the purchase is to save regularly, reduce their debts like car loans, credit cards and interest-free loans. Whilst financial regulations have been implemented to stop financial institutions offering increased credit card limits, customers should not give the authority to their credit card provider to offer the increased limits. I see many young people who've got credit card limits of around $40,000-$50,000.
Wow!
But they may only owe $2,000 in $2,000 on debt. But the size of the credit card limit is taken into account when we assess whether a client has the ability to service a debt. So it's very, very important to reduce as much debt as possible before going into purchasing a house. As I said, plan, consult, and be in that position so that when you come to buy a house, you're going to obtain finance on the first attempt, and you're not going to suffer the disappointment of saying, oh, I've signed a contract and now I've lost that house because I can't get the finance.
Okay, well, that's sound advice, David. Thank you very much for that. We're going to go for a short break, and then we'll be back with David and some more questions. Welcome back to the Real Estate Show, and I've got David Dioff from Moneywise Mortgages here with me. Now, during the break, David and I were just having a bit of a chat, and something came up that's always interesting is interest rates. David, what's your thoughts on what may happen next Tuesday, mate?
Thanks, Joe. Next Tuesday, with the Reserve Bank announcement, I think there is a possibility of another rate reduction of 0.25%. However, no one should preempt what the Reserve Bank is going to do. The reason for my indication that the interest rates could fall next week is that the recent inflation figures show it's below the Reserve Bank's benchmark, and also unemployment is on the rise, and spending is not happening. It's not increasing like with the previous reductions in interest rate. It hasn't created spending, so consumer spending. So I think there is a possibility. If it's not in August, it could be in September. It would probably be in September.
Oh, David, it'd be great if it did. I'd be very, very happy.
I think there'd be a lot of borrowers out there who'd be happy.
Yes. Okay, now back to some more questions. David, what do lenders require for a loan? So just give the listeners an idea of different things that they should be prepared to be asked for by yourself or the bank when applying for a loan.
Thanks, Joe. The banks look at a number of aspects when they assess the credit risk associated with a borrower. First, most important one is sound employment. They look at the length of your employment, how regularly you change your job, and whether you're on probation or not. If you're on probation, you will probably find it very hard to get a loan, as the banks are looking for you to become off there and appointed to the position. You've got to have a good credit rating. The credit rating is whether you've had any defaults, whether you've been met all your commitments, etc. And people think, oh, well, I've got to get a credit card or whatever to get a good credit rating. Well, that's not really entirely correct, because the only thing that shows on your credit rating is that you've applied for finance or a credit card, etc., and then whether you've had a default, they're listed. So really it makes no difference whether you borrow or not, but the main thing is to create a good credit rating by not going into default. And people should check their credit rating every couple of years, as I've seen so many times that things have been recorded on the wrong person's name. You should have stable residential addresses. You should have a sound balance sheet. That's your assets and liabilities. And the banks look at that balance sheet based on your age and income. Your assets must be greater than your liabilities. That means what you owe is more than what you own is more than what you owe. and the serviceability for the loan takes into account living expenses and other financial commitments. So the less commitments you have, the better and easier to get the loan.
So it's important that people do disclose up front if they have little higher purchases or if they've got things on lay-by that are a substantial item, and things, anything to do with credit that may not show up at a glance, hey?
That's right. Under the new national credit requirements, borrowers must disclose all information, and also the banks and mortgage brokers must disclose all the customers' commitments.
Okay, now, David, we in real estate have seen a lot of changes in home expectation for the first home buyer over the last 20 years. I've been in real estate for 23 years locally, and when I first started, the first home buyers were actually looking for a 3-bedroom, 1-bathroom home and were quite happy with that, to either have a carport or an attached garage. But nowadays we're seeing the expectation of more moving into the 4-bedroom ensuite, as opposed to that 3-bedroom, 1-bathroom home. How is this affecting the borrowing capacity and the length of loan for repayment, David?
Well, Joe, most people still borrow over 30 years. That's the maximum term. Sometimes it's motored that we're going out to 40 and 50-year loans, but at the moment it's still at 30 years. My advice to young people or to people is to try and reduce that debt as soon as possible, making additional repayments. And there's facilities available to use that, like offsets and redraw facilities, so that they can throw the money in there to reduce the amount of interest until they require the funds. The younger generation is tending to purchase 4-bedroom homes with en-suites, entertainment rooms, all the other luxury little items. 20 years or so ago, it was 3-bedroom standard. Statistics in Australia show that the average house should be about 3 bedrooms, and statistics show that only 2.5 bedrooms is being utilised Australia-wide. So it indicates that a 4-bedroom home is you've got excess space.
Okay, too big for what the requirements of family living are. But it's nice to have a nice home.
That's the thing, and that's what young people look at. The larger the home, the higher the purchase price, so the larger the loan. I explain to customers they should consider their lifestyles, family requirements. You need to have sufficient funds left after paying your living expenses, home loan and other commitments, so that you can still enjoy your time at the movies or a meal out with the family or an excursion with the children and holidays. So you still have to maintain your lifestyle, otherwise you have too many other pressures brought to bear on the relationships, etc.
And that's important, isn't it?
That's very important.
You're buying the home for the family, and you want the family to stay together and not have too many external pressures.
That's right.
Now, David, I know we say first home buyers buying homes, okay, but a home can be a unit, it can be a townhouse or a home or acreage. So what are first home buyers buying? Are there any statistics on that?
No. I was actually watching a show last night which shows that more and more people in the city area are going into units. The unit price is actually increasing in some areas compared to the house price. Demographics denote what sort of property home buyers want. In the city area, as I said, they tend to buy units. They're lifestyle driven as to their purchase. Some want to live close to work. Their occupation dictates it, their lifestyle dictates it. In the outer suburbs, they tend to buy houses and townhouses, and once again, family size dictates how big a house, how much yard space you want. It is all based on family requirements and lifestyle.
Okay, and that's fair enough, because we know that in the area out here we've got plenty of space and land, so most people come out to Caboolture to buy houses.
That's right.
Rather than townhouses and units, but then again, younger couples and so forth do the others as well. David, now this is an interesting question. I'm interested to hear what your answer is. Now, should people borrow to the full extent of what the lenders say that they can, or should they borrow less? Should they go to the maximum of their loan capacity?
Well, Joe, the amount a person wants to borrow is really is personal to them. I know most people want to know how much they can borrow. What they really want to know is is not the maximum amount they want to borrow. It's really, can they afford to buy a particular house in a particular price range? They usually have an idea of the price range before they come and talk to us, and that is what I work with. And then they tell them they can borrow more if they want to go slightly higher to get a little bit better home with close to their current price range. Generally, most people have been looking at houses and they know what price they will need to pay. People consider their lifestyle and family requirements, know the price range, and that's the area they go. The current economic conditions are influenced by how much they want to borrow. Most do not want a huge loan, as they want to repay the debt as fast as possible. This is highlighted by what happened in 2005, 2007, where people borrowed 100% for homes, and now their home price is below their current debt level.
Right.
And new borrowers are aware of this and are more conservative.
Well, actually, just looking at our statistics at the moment, we're probably selling homes for what people paid for them before 2007. So
That's right.
You're quite correct with that comment. The other thing that I also see happening in the industry is that people borrow to the maximum of their capacity, and then they can't furnish the home, or if the car breaks down, they have issues and things like that. So, my side of things is, don't go to your limit. Leave yourself a little bit of a reserve so that you don't have too many stresses if something goes wrong.
That's why I said in one of the earlier questions, you need to consider all those things like unexpected expenses, taking the family on a holiday, taking the kids to an amusement park, or even just going to the movies. You still got to be able to do those lifestyle things.
Mm-hmm.
Otherwise, I do see people who want to just pour everything into their house, and it puts so much pressure on them. And then you have to kind of go in and become a family counsellor as well.
Yeah. David, look, thank you very much for your time. This was David Dioth from Moneywise Mortgages, and thanks for your time again, David.
Thanks, Joe. It's been a pleasure.
Well, welcome back to the Real Estate Show. Now, I'd like to introduce a thought for the week. This week, I'd like to give a tip to sellers. And my tip is that when you're getting ready to put your property on the market, I always suggest to the sellers that I come in contact with is go for a walk across the road or the street from your home and look back at your home objectively, because the buyer will be seeing it for the first time when they do a drive-by or see the sign or get given the address. So look at your home and absorb what the buyer will see in the home. So if there's basic maintenance that needs doing, you'll be able to see it by just taking an objective look from the street, from the other side of the road, from your home. Welcome back to the Real Estate Show. With me in the studio now, I've got Brant King from Quinn & Scatini. Brant, would you like to give a little bit of an intro on yourself, please?
Yeah, thanks, Joe. As Joe said, my name's Brant King. I work for Quinn & Scatini Lawyers on 25 King Street in Caboolture. I do residential and commercial conveyancing, full-time job, so been doing that for about over 5 years now. Absolutely loving it.
You do? You like the people?
Mate, I love people.
Okay, great, because it does take people skills to work in your kind of job as well as in real estate.
It certainly does.
All right, Brant, so this morning we're here to talk about the perils of giving a buyer occupation before settlement.
Yeah, there are a number of pitfalls. We've just had a recent one where the seller granted the buyer early possession, and the hot water system blew up. Now, that creates a bit of a minefield as to who is responsible for it. Now, there are two contracts out there. There's an REIQ contract, which is the Real Estate Institute of Queensland.
Yes.
And there's an ADL contract, which is designed by a company by AD Little. Mm-hmm. So there's two different contracts, and they read completely differently. With the REIQ contract, if you sign that, then the onus is on the buyer to replace anything that's broken or anything like that while they're in possession of the property.
Right.
If it's a ADL contract, then it is up to the seller to repair any item that's damaged or anything like that while the buyer's got possession.
Okay, because that's always an interesting thing for me. I mean, I haven't done it very often in my career, but the times that I have, I've always made sure that the buyer is aware that when they take possession of those keys before handing over the rest of settlement money, that they're aware that they are taking responsibility for that property.
Yeah, Joe, look, that's right. Most people will take responsibility for the property, but when it's a big ticket item, it might be a couple of $1,000 or something like that. Yeah. They don't really want to try and fork out for it if they can get away with it. So, you've got to really be careful about what you do, especially as a seller. You just don't want to make sure that anything's going to come back to cost you more or haunt you later on.
Yep. Okay. In your experience, have there been any other issues, like, apart from the hot water system, are there any other things that can happen and makes giving possession before settlement a hard one?
Yeah, look, another issue is if the property doesn't actually settle and it is protracted, trying to get the buyers out of the property or getting some remuneration up until settlement.
Right.
So you've got to be aware that, the seller is still going to be making loan repayments, anything like that. And if you've given access, you're not actually charging a rent unless that's agreed to within the contract.
But it does make it hard then for the buyer as well. If they've already moved in, where are they going to go?
Oh, that's exactly right. Most of these people have given up their tenancies or sold their house, so that they need to try and find somewhere to go. But like I said, always talk to your conveyancer before you even consider entering into granting early possession or asking for early possession. You need to be sure of what you're going to be getting into. You don't want to all of a sudden have issues where you can't settle for a month or two because of your bank.
Yes.
And be caught in no man's land. It's just going to cost you a lot more.
And for early possession, obviously the bottom line, I suppose, would be that the contract is unconditional at that stage. So finance, building and pest have all been accepted, and then you look at that scenario, but you wouldn't look at it beforehand, would you?
No, definitely not. If the contract's not unconditional, then there's no way that I would, as a conveyancer, would recommend or allow you to. It'd be a big no-no for me. I'd just say, not a chance. You've got to cover your butts because the cost to you could be astronomical in trying to get somebody out. It may take a number of months, it may take a year, and it may take court proceedings. So you've got to be very wary of what you're doing.
Okay. And sadly, that does bring it down to having to trust people, that what they say is the correct thing during a transaction, although the written word is the law. But, you do feel for people, so you do want to give them sometimes early possession because of their circumstances, but that can actually come back and bite you and create problems.
Oh, certainly. It's as a last resort, we'd have to look at all the conditions. We'd have, if we wanted to, we'd draw up special conditions to allow for that, and hopefully, it'll all transpire without any issues. But still, before you grant possession, talk to your conveyancer, find out exactly where you stand, what your legal liabilities and risks are, and go from there.
Brant, great. Look, thank you very much for your time this morning and for answering that question for us. Have a good day.
Not a problem.
Welcome back to the Real Estate Show, and you're listening to 101.5 FM. As some of you listeners may be aware, last month I went overseas on a holiday for a family reunion in Europe. And one of the trips that I did with my children was actually go down to Rome. Whilst in Rome, I did approach a number of real estate agencies and offices looking at what real estate they had for sale and just to ask some general questions. The difficulty I did have was the language barrier. I don't speak Italian, and most of the agents did speak broken English, but weren't able to answer a lot of the technical questions for me. But one of the things I did find out is that I thought we had some pretty big franchise groups here in Australia until I spoke to this one gentleman in Rome, and he tells me that his franchise group is 3,500 franchises. So that's in Italy only. I thought that was rather interesting. And again, they work on the same formula of having areas that they specialise in, just like we do locally. You get local agents specialising in that area, and they're the ones with most of the information of what goes on in that area, and that's why locals stick with locals. Well, this is just about it for the real estate show this week. I'd like to again thank David Dioth from Moneywise Mortgages for his time, and Brand King, who represented Quinn and Scatini. So to all your listeners, have a good week.